Hi, in this video we are going to see problems on insurance claim. Okay, so please read the theory part and read all the formulas and the format which I had given it to you. Now let's go to the problem. So first is illustration number 26. Let's read the problem first. A fire occurred on 15 September 2013 in the premises of SN Company. From the following figures, calculate the amount of claim to be lodged with the insurance company for loss of stock. So they have given you stock at cost on 1/1/2012 40,000, stock at cost on 1/1/2013 60,000, purchases in 2012 80,000, purchases from 1/1/2012 to 15/9/2013 which is 1,76,000, sales in 2012 1,20,000, sales from 1/1/2013 to 15/9/2013 is 2,10,000. During the current year, cost of purchase has risen by 10% above the last year's level. Selling prices have gone up by 5%. Salvage value of the stock after fire was 4,000. Okay, so read the question again from your material. Let's move on with the solution. First, we have to do some workings. First step, they have not given you the percentage of gross profit on sales. Since GP percentage is not given, we have to calculate that. So in order to calculate the percentage of gross profit on sales, we are going to do a trading account. This is only for the calculation of percentage of gross profit, and this will be for the preceding period. Okay, so the preceding period will be for the year ended 31/12/2012. Okay, it will be 11/12. That will be the preceding period. Okay, so here debit and credit, particulars rupees, particular rupees, to opening stock given 40,000, to purchases which is 2012 purchases less return which is 80,000. This is also given in the question. And in the credit side we have buy sales less return. In 2012 it is 1,20,000 given in the question. Buy closing stock which is 60,000. This is also given in the question. Okay, so all are given in the question. With this we can find the gross profit, which is nothing but your balancing figure. Okay, so the total of your credit side is 1,80,000. The total of your debit side is 80,000 plus 40,000, which is 1,20,000. The debit side is short of your credit side, so this balance 60,000 will be your balancing profit, which is called as to gross profit. So we have found out the amount of gross profit. Next we can find the percentage of gross profit on sale. Simple formula, GP by sales into 100. So gross profit is 60,000 as found out here, divided by the sales. Sales is nothing but 1,20,000 here. See, it's also given in the question. So 60,000 divided by 1,20,000 into 100, which is 50%. So the percentage of GP on sales for the year 2012 is 50%. Okay. Second is purchases. We have to find the last year purchase. Okay. For one from 1/1/2013 to 15/9/2013, the purchase is 1,76,000 given in the question. We have to find the last year purchase. Okay, what is given is the cost of purchase has risen by 10% above the last year level. So we will do a simple calculation. Let last year purchase be X. So X plus 10% of X is equal to 1,76,000. Okay, because it has risen. If it has fallen down, we will just do minus, that's all. So just solve this, you will get X plus 0.1 X is equal to 1,76,000. So X is equal to 1,60,000. Okay, you can use this method also, or a simple formula is 1,76,000 into 100 divided by 110. You just have to reciprocate it. Okay, 100 divided by 110. 110 is nothing but 100 plus 10. 10 is your increase in cost of purchase. So it will be 100 plus 10. If your increase in cost of purchase is 20%, then you will do 100 plus 20, which is 120. Okay, since it is 10, you will do 100 plus 10, which is 110. So this is a very simple formula, but this is the logic behind this formula. Okay, this is the concept used behind this formula. So whatever it is, you will get the same answer, which is 1,60,000. Similarly, we have to do the same for our sales. Okay, so sales from 1/1/2013 to 15/9/2013 is 2,10,000. Given selling price has gone up by 5%. Okay, so let the last year sales be x. So x plus 5% of x is equal to 2,10,000. X plus 0.05x is equal to 2,10,000. 1.05x is equal to 2,10,000. Therefore, x is equal to 2 lakhs. You can also use this formula, 2,10,000 into 100 divided by 105. How you got this 105? It is 100 plus 5. Okay, so you will get 2 lakhs. Next step is we will calculate the memorandum trading account for the period 1/1/2013 to 15/9/2013. What is 15/9/2013? It is the date on which fire occurred. Okay, so debit and credit particular particulars current year and previous year. So CY means current year, PY means previous year. Okay, and similarly in the credit side we have particulars CY and PY. Okay, now to opening stock it will be 60,000. Okay, where did we get the 60,000? The closing stock of the previous year would be the opening stock of the current year. Okay, so both will be 60,000, 60,000. To purchase it is 1,76,000 and in the previous year it is 1,60,000. We found this purchases here in our workings. Okay, last year purchase is nothing but 1,60,000 and the current year till this date the purchase is 1,76,000. This is what we are writing it in this memorandum trading account. Okay, to purchase 1,76,000, 1,60,000. Similarly, buy sales 2,10,000 and 2 lakh. This 2 lakh was what we had found out in our from our workings. Okay. Next is buy closing stock. Okay, so by closing stock we have first we have to do for the previous year. Okay, then only we have to do for the current year. Now we have in the debit side we have to calculate the gross profit, and in the credit side we should get the closing stock. Okay, so first we are going to take the previous year. We have opening stock as 60,000, purchase as 1,60,000. 2 GP we have to find out. We have already calculated the percentage of gross profit, which is nothing but 50%. From our workings we have got 50% of GP ratio, GP percentage. Okay, so we can calculate the gross profit. Gross profit is nothing but 50% on sales. What is the sales for the previous year? It is nothing but 2 lakhs. Okay, so 2 lakhs into 50%, 1 lakh will be the gross profit for the previous year. Now you add all the debit side and you all add the credit side. So in the debit side you will get 3,20,000 and in the credit side you will get 2 lakh. So the difference 3,20,000 minus 2 lakh is 1,20,000. This is your balancing figure. Okay, for your previous year your balancing figure is your closing stock. Okay, so this is your closing stock, very important. Okay, first we are calculating the previous year and then only we will go to the current year. What is important here is your gross profit and your closing stock. We have found out the sales to be 2 lakh and purchase to be 1,60,000. Okay, now that we have got the closing stock of the previous year as 1,20,000. Now in the question it is given that there is 10% increase of the closing stock from the previous year level. So it is nothing but 1,20,000 plus 10% on 1,20,000, which is 1,32,000. This is the current year closing stock. Okay, you have to read the question carefully. Right, so you get the closing stock for the current year to be 1,32,000. Now just add the credit side and the debit side, you will get the balancing figure in your debit side. So your gross profit for the current year is 1,06,000. Okay, this is how we are calculating the gross profit. Now next step is to calculate the amount of claim. So the value of stock as on the date of fire is 1,32,000. This is nothing but your closing stock. Okay, So less stock salvages, which is given as 4,000. So 1,32,000 minus 4,000 is 1,28,000. This is the actual value of stock loss. Okay, so this is what they are asking us to find in the question. Very simple. Now moving on to illustration number 27. Okay, so let's read the problem first. Okay, so this is the illustration number 27. Mr. X's godown was destroyed by fire on 1/6/2013 when the goods in stock were insured for 60,000. The following particulars were given. So balance sheet is given. Creditors for good, which is 20,000, and stock 36,000, and debtors 70,000. Next is transaction up to 31st May 2013 include. They have given you all the transactions. Okay, cash received, bad debts, written off, closing balance, all are given. Next is additional information. Debtors on 31/3/2013 included an amount owing from an agent from sales to date rupees 4,000 less 10% commission and his expenses amounting to 100 on 31/5/2013. The agent still held the said goods valued at 3,600 at selling price. Number 2 is sales, that is total for the period include 1,600 for goods which have the selling price reduced by 50% and also rupees 6,000 reduced by 25%. The normal markup is 50% on cost, and expect the above all sales can be assumed to be at the full selling price. All the goods were destroyed and there were no salvage value of the goods. Calculate the amount of claim. Okay, so this is the question. Please read the question again from your material. So we are going to the solution. Now cost is 2/3 of selling price. This is not given in the question. Okay, we are going to assume that cost is 2/3 of the selling price. Okay, so now in the books of Mr. X, debtors account, debit, credit, date particular rupees, date particular rupees. So in the debit side first, 2013 Jan 1st is the opening balance, that is two balance brought down 70,000 given in the question. In the credit side, 2013 to May 31st, which by cash received 3,40,000 given in the question. By bad debts, we have a note for the calculation of bad debts. We will see the note. Okay, let's see the note now. Now here we are going to calculate the bad debts amount. Now sales is 4,000, okay, which is given, less commission, that is at 10% on sales, that is 10% on 4,000, which is 400, and less your expenses, which is 100. So 4,000 minus 500 is 3,500. This is the bad debts amount. So that we are taking to the credit side, which is 3,500. Okay, so bad debts amount is 3,500. Then next is closing balance, that is 70,000 minus 3,500. This is excluding the agent commission given in the question. So which is 66,500. Now the balancing figure comes in the debit side, which is 3,40,000. So that will be called as two sales, which is the balancing figure. Okay. Now next moving to the creditors account. So again here in the creditors account, in the debit side, first let's see the credit side, because creditor side, credit, it will always be the credit balance. That is, what is the meaning of credit balance? The opening balance would come in the credit side. So 2013 Jan 1st by balance brought down is 20,000. Then going to the debit side, 2013 May 31st to cash paid 2,20,000, to discount received 1,000, and to balance CVD, which is 30,000, all given in the question. So the balancing figure comes in the credit side, so which is called as by purchase. Okay, so your purchases is 2,31,000 and your sales is 3,40,000. Then next is your godown stock account. Okay, the godown stock account. So debit and credit. Date 2012 May 31st is two balance brought down. This is your opening balance, which is 36,000 minus 2,000, 34,000, and 2 purchase from creditors is 2,31,000. This 2,37,000 we got it from the creditors account. Okay, this is nothing but your balancing figure in the creditors account. Then in the credit side, 2013 May 31st, by cost of goods sold, we have a note for cost of goods sold calculation. Okay, so let's see the note first. Okay, so this is the note for calculation of cost of goods sold. COGS means cost of goods sold. So first is sales, normal selling price, and cost, which is nothing but 2/3 of the selling price. Okay, so the sales is 1600, the normal selling price is 1600 divided by 0.5, okay, which is equal to 3200. Because it is given in the question that 50% is reduced, there is a reduction of 50% in the selling price. So 100 minus 50 is nothing but 50%. So this 50% is nothing but 50 divided by 100, which is 0.5. This 0.5 only we are writing it here. Okay, so which is 3200. So the cost will be 2/3 of the selling price. So 3200 into 2 by 3, which is 2133. This 2 by 3 is not given in the question. This is just an assumption which we are making. If it is not given, you can assume it to be 2 by 3. Okay, in any question, if it is not given in any question for this insurance claim, if the cost is not given, you can assume it. So next, when the sale is 6,000, now the selling price is reduced by 25% given in your question. So 100 minus 25 is 75. Okay, so 100 minus, that is 6,000 into 100 by 75. This is the same thing as we did earlier. Okay, which is 8,000. So the cost would be 8,000 into 2 by 3, which is 5,333. Okay, now the total sales is 3,40,000. Okay, the total sales is 3,40,000, which is given in the question. Okay, so now the balancing figure is nothing but 3,33,400. That is 3,40,000. This is given. Okay, 3,40,000 minus 1,600 minus 6,000 is 3,33,400. So with this balancing figure, we can calculate the cost. 3,32,400 into 2 by 3 is nothing but 2,21,600. So you will get the total cost, which is nothing but 2,133 plus 5,333 plus 2,21,600. So you get the total cost of 2,29,066. Okay, so this is your cost of goods sold. For this calculation only we did all. Okay, so now going to the go down stock account again, by cost of goods sold, which is 2,29,066. Next is buy stock at agent, which again we have a note here. So we are going to that note. So here sales is given as 4,000. So cost is 4,000 into 2 by 3, which is 2,667, and 3,600 into 2 by 3, which is 2,400. Okay, given in the question. Both are given in the question. So if you add both, you will get 5,067 minus agent's stock in the agent hand, which is 2,000. This is also given in the question. So you will get total stock which is held by the agent, which is nothing but 3067. This 3067 will be taken to the go down stock account here, 3067. Now the balancing figure is called as buy stock destroyed by fire, which is nothing but your balancing figure. Okay, which we got it as 32,867. Please understand, in the question they have not given you the amount of stock or value of stock destroyed in fire. So that is why we are calculating, we are making all these calculations. Okay, this is a different kind of a problem, and this is also an important problem. Okay, now next, moving on to illustration number 28. So let's read the question first. X Limited has taken out a fire policy of 1,60,000 covering its stock. A fire incurred on 31st March 2013. The following particulars are available. Stock as on 31/12/2012 60,000. Purchases to the date of fire 2,60,000. Sales to the date of fire 1,80,000. Carriage inwards 1,600. Commission on purchase to be paid at 2%. Gross profit ratio is 50% on cost. You are asked to ascertain the total loss of stock, amount of claim to be made during the insurance company, assuming that the policy was subject to average clause. Stock salvage amount to 41,360. Okay. Now moving to the answer. Now we are going to calculate the memorandum trading account. Trading account is not required because the gross profit percentage is given in the question. So memorandum trading account, in the debit side we have 2 opening stock which is 60,000 given, 2 purchases 2,60,000 plus carriage inwards 1,600 plus commission on purchase, that is 2,60,000 into 2% commission, which is 5,200. So the total purchase comes to 2,66,800. Then we have gross profit, to gross profit. It is given as 50% on cost. Okay, if it is 50% on cost, then it would be 33.33% on sale. This is a thumb rule. Okay, the calculation part is very lengthy. Okay, so I don't think that will be necessary for you because it is very lengthy. Okay, that will go on to pages and pages. It will take me half an hour to 40 minutes to explain you this concept. Okay, so please understand that 50, if it is 50% on cost, then it is 33% on sales. Okay, have this as a thumb rule. This is a rule. Okay, that's all. So 33% on sale is nothing but 60,000. Okay, so sales is 1,80,000. Okay, given in the question. So 33% on sale is 59,600, comes to 59,600. So we can also round it off. So I have rounded it off and I have written it as 60,000. Okay, so in the credit side we have buy sales which is 1,80,000. So our balancing figure is the closing stock which is 2,06,800. Okay, this is our balancing figure because we have already got gross profit. Now the next step is we can calculate the loss on stock. So stock at the date of fire is 2,06,800. This is nothing but the closing stock which we found earlier minus the salvage stock 41,360 given in the question. So we get the loss of stock as 1,65,440. Next is, in the question they have given that average clause is applicable. So the amount of claim is equal to actual loss. This is net claim is equal to actual loss into amount of policy divided by value of stock at the date of fire. So the actual loss is 1,65,440. Okay, that is nothing but what the loss of stock which we found out earlier. So that amount into 1,60,000, this is the amount of policy which is given in the question, divided by 2,06,800, this is the value of stock. Okay, so we would get the average clause, that is the net claim, amount of claim. This is nothing but your net claim. So the net claim amount is nothing but 1,28,000. Okay. So moving on to the next problem, illustration number 29. So let's first read the question. Here, this is the question. A fire occurred in the premises of Shri G. Venkatesh on 1/4/2013 and a considerable part of the stock was destroyed. The stock salvaged was 28,000. Shri Venkatesh had taken a fire insurance policy for 17,10,000 to cover the loss of stock by fire. You are required to ascertain the insurance claim which the company should claim from the insurance company for the loss of stock by fire. The following particulars are available. So purchases for 2012 9,38,000, sales for 2012 11,60,000, purchases from 1/1/2013 to 1/4/2013 is 1,82,000, sales from 1/1/2013 to 1/4/2013 is 24 lakh. Stock on 1/1/2012 is 1,44,000. Stock on 31/12/2012 is 2,42,000. Wages paid during 2012 is 1 lakh. Wages paid 1/1/2013 to 1/4/2013 is 1,80,000. Sri Venkatesh had in June 2012 consigned goods worth rupees 50,000, which unfortunately were lost in an accident. Since there was no insurance cover taken, the loss had to be borne by him full. Stock at the end of each year for until the end of the calendar year 2011 had been valued at cost less 10%. From 2012, however, there was a change in the valuation of closing stock, which was ascertained by adding 10% to its cost. So this is the question. Let's move on to the answer. Okay, so trading account, this is just to find the rate of gross profit because it is not given in the question. So for the year 31st December 2012, we have opening stock as 1,44,000 into 100 by 90, because the opening stock is reduced by 10%, okay, which is 1,60,000. Two purchases 9,38,000 given, two wages 1 lakh given. Then in the credit side we have buy sales 11,60,000, buy stock lost by accident 50,000, and buy closing stock, which is 2,42,000 into 100 by 110, because it is given in the question that there will be an increase in 10%. So we get 2,20,000 as closing stock. Therefore, the balancing figure will be in the debit side, which is called as gross profit. The gross profit amount is nothing but 2,32,000. Okay. So the rate of gross profit will be gross GP divided by sales into 100. So 2,32,000 divided by 11,60,000 is nothing but your sales into 100, which is 20%. Next is memorandum trading account. So here this is for the period from 1/1/2013 to 1/4/2013, okay, till the date of fire. So to opening stock, which is 2,20,000. This 2,20,000 is nothing but the closing stock of the previous year. The closing stock of the previous year would become the opening stock of the current year. Okay, so two purchases, which is 1,82,000, two wages. In question it is 1,80,000, which is wrong. Okay, the correct amount is 18,000. Okay, that is, there is a small printing mistake in your material. Okay, so the wages is 18,000. Now buy sales, this is also wrong in the material. In question it is 24 lakhs, that is the amount is only 2,40,000. Okay, this is again a printing mistake, so it is 2,40,000. So to gross profit, we have two gross profit, which is 20% on sales, because we have calculated the rate of gross profit here as 20%. So 20% on sales amount is 2,40,000. Okay, 2,40,000 into 20% is 48,000. Therefore the balancing figure comes in the credit side, which is called as closing stock. So this is our value of stock lost as on date of fire. Okay, now the amount of claim, which is equal to stock destroyed as on date on fire minus salvage value, which is nothing but 2,28,000. That is what we have found out here, minus 28,000 given in the question, so it is 2 lakh. Okay, now this is what is the amount of claim. Now in the question, the policy amount also there is a printing mistake. Okay, which is the policy amount is only 1,71,000. Okay, but in the material there will be one more zero added to this, so it makes 17 lakh. That is a printing mistake. Okay, which is 1,71,000. So as the policy amount is less than the value of stock destroyed, average clause is applicable. Okay, this is very important. As the policy amount is less than the value of stock destroyed, the average clause is applicable. Okay, so next is we have to calculate the amount of claim, that is the net claim. Okay, this is nothing but your net claim. Simple formula: loss of stock into amount of policy divided by stock at the end of the fire, that is on the date on fire. 2 lakh into 1,71,000 divided by 2,28,000, which is 1,50,000. Okay, Okay, so next moving on to illustration number 30. Let's read the question first. Okay, so on 1/4/2013, godown of Y Limited was destroyed by fire. The records of the company reveal the following particulars. Stock on 1/1/2012 is 75,000. Stock on 31/12/2012 is 80,000. Purchases during 2012 is 3,10,000. Sales during 2012 is 4 lakh. Purchase from 1/1/2013 to the date of fire is 75,000. Sales from 1/1/2013 to the date of fire is 1 lakh. In valuing the closing stock of 2012, 5,000 was written off. Whole cost was 4,800. Part of the stock was sold in 2013 at a loss of rupees 400 at 2,400. Stock salvaged was 5,000. The godown and the cost of which was fully insured indicate the above amount of claim to be made against the insurance company. Okay, so moving on with the solution. So trading account, this is to find the percentage of gross profit since it is not given in the question. So to opening stock 75,000, to purchases 3,10,000 minus purchase of abnormal item, that is 4,800. So purchases 3,05,200. Then credit side, buy sales 4 lakh, buy closing stock which is 80,000 plus loss on abnormal item 5,000 minus 4,800 is 200. So the closing stock, this is very important in this problem. This problem is another type of problem where you have abnormal item. Okay, so purchase of abnormal item you have to reduce from the actual purchases, and loss on abnormal item you have to add with the closing stock. Okay, so we get the closing stock as 80,200. Therefore the balancing figure comes in the debit side, which is called as gross profit. Okay, so now we can find out the percentage of gross profit, that is GP divided by sales into 100. So 1 lakh divided by 4 lakh into 100, which is 25%. Now memorandum trading account as on 31st March 2013. Now opening stock will be 80,200 because the closing stock of the previous year would be the opening stock of the current year. Two purchases which is 75,000. Two gross profit, that is 25% on sales. Sales is 98,000. How we got this 98,000? We go to the credit side, buy sales which is 1 lakh minus sale of abnormal stock, that is 2,400 minus 400. Okay, this is also very important, which is 2,000. So 1 lakh minus 2,000 is 98,000. So on this 98,000 only we have to calculate the gross profit ratio. That is the amount. 25% on 98,000 is 24,500. So when we go to the credit side, we have sales as 98,000. Therefore the balancing figure is in the credit side, which we call it as closing stock, which is 81,700. So now the amount of claim, this is the next step. Stock as on the date of fire is 81,700 minus salvage stock, which is 5,000. So this is the amount of claim, 76,700. Okay, so next moving on to illustration number 31. So let's read the problem first. Okay, on 30/9/2013, the stock of Harshavardhan was lost in a fire accident. From the available records, the following information is made available to you, enable you to prepare a statement of claim of the insurer. So they have given you the particulars, amount and all the details. Please read them. I'm not going to read this. So in valuing the stock on 31/3/2013, due to obsolescence, 50% of the value of stock, which originally cost rupees 12,000, had been written off. In May 2013, 3/4 of the stock had been sold at 90% of original cost, and it is now expected that the balance of the obsolete stock would also realize the same price, subject to the above. GP had remained uniform throughout the stock to the value of 14,400 was salvaged. Okay, so let's move on with the answer. So first is trading account to find the percentage of gross profit. So for the year ended 31/3/2013, 2 opening stock in the debit side, 2 opening stock 75,000, 2 purchase less return, which is 5,07,500. Credit side we have buy sale, which is 6,30,000. So by closing stock it is 1,04,000 plus 6,000. Please read the question carefully. So you will get the GP, that is the balancing figure is in the debit side, which is 1,57,500. This is the balancing figure. Then we can find out the percentage of gross profit, which is GP divided by sales into 100. So 1,57,500 divided by 6,30,000 into 100 is 25%. So number 2 is sale of abnormal item of goods, which is 12,000 into 3 by 4 into 90 by 100. Please read the question carefully. They have given you the abnormal item, okay, which comes to 8,100. And number 3 is closing stock of abnormal item, which is 12,000 into 1 by 4 into 90 by 100, which is 2,700. Okay, now moving on to memorandum trading account. So for the period ended 30/9/2013, debit and credit. So we are just having normal, abnormal and total. T means total. Similarly, even in credit we have normal, abnormal and total. Okay, so debit side to opening stock, that is 1,04,000 minus 6,000, okay, which is 98,000, and abnormal will be 12,000 into 50%, which is 6,000. Okay, please read the question carefully. This is a very important problem. So the total is 90,000 plus 6,000, which is 1,04,000. Next is 2 purchases, which is 2,90,000, only normal. There is no abnormal purchase, so the total is 2,90,000. Okay, 2 gross profit, which is 25% on sale. We have found out this 25%. So it is sales into 25%. Okay, that is sales is nothing but 3,60,000, 8,100. Okay, into 25% we would get 90,000 and 4,800. So the total comes to 94,800. Now credit side we have buy sales, which is 3,60,000 and 8,100. So where did we get this 8,100? From our workings here. 8,100 is the sale of abnormal item which we had got, and this total is given. Okay, it is given as 3,60,000. So add both, we will get the total sales. Now by closing stock, here 2,700 we got from the note here from the working. Okay, 2,700. So that's what we are taking in the abnormal column. Total is nothing but your balancing figure. Okay, that is you add the total column here in the debit side and in the credit side. So you will get the balancing figure of total, which is 1,20,700. So what is your normal closing stock, which is nothing but 1,20,700 minus 2,700. Okay, which is 1,18,000. So this is what is very important in this problem. This is a very different type of a problem. Okay, so this is what is important. The last step, closing stock, is very, very important. Then as usual we'll calculate the amount of claim, that is stock as on date of fire is the total stock, that is 1,20,700 minus stock salvage, which is given as 14,400. So we get 1,06,300. Okay, so next is moving on to the illustration number 32. So before moving on to the solution, let's read the question. From the following particular, prepare a claim for loss of profit under the consequential loss policy. So date on fire is 30th June 2013. Period of indemnity is 6 months. And sum insured is 25,000. Turnover for the year ended June 30, 2013 is 1 lakh. Net profit for the accounting period ending March 31st, 2013 is 6,250. Standing charges is 14,250. Turnover as on 31st March 2013 is 99,000. Turnover for the indemnity period, which is 28,000, and turnover for the period 1/7/2012 to 31/12/2012 is 55,000. So the turnover of the year 1213 has shown a tendency of increase of 10% over the turnover of the preceding year. Okay, so let's move on to the answer. So first is we have to calculate the short sale. So how will you calculate the short sales? It is standard turnover, that is from 1/7/2012 to 31/12/2013 is 55,000. Add 10% increase in 12/13, which is 10 percentage on 55,000, so 5,500. We get 60,500. Then less actual sales during the indemnity period, which is 28,000. So we get the short sales of 32,500. Next is number 2 is calculation of rate of gross profit. So there is a formula: net profit plus insured standing charges divided by sales into 100. Okay, so it is 6250 plus 14,250 divided by 1 lakh into 100, which is 20.5 percentage. Number 3 is calculation of gross claim, that is GP on short sales, that is 32,500 into 20.5 percentage, which is 6,663. Add increased cost of working, nil, less saving in the standing charges, nil. So amount of gross claim is 6,663. Okay. Now moving on to illustration number 33. So before going to the solution, let's read the problem. There was a serious fire in the premises of ABC on 1/9/2013. Their business activities were interrupted until 31st December 2013, when normal trading conditions were re-established. ABC are insured under the loss or profit policy for 42,000. The period of indemnity being 6 months. You are able to ascertain the following information. Net profit for the year ended 31st December 2012 was 20,000. The annual insurable standing charges amounted to 30,000, of which 2,000 were not included in the definition of insured standing charges under the policy. The additional cost of working in order to investigate the damage caused by fire amounted to 600, but for the expenditure the business would have had to shut down. The savings in insured standing charges in consequence of the fire amounted to 1,500. The turnover for the period for 4 months ended April 30th, August 31st, December 31st in each of the year 2012 and 2013 was as follows. So 2012 amount is 65,000, 80,000 and 95,000. For 2013 it is 70,000, 80,000, 15,000. You are required to compute the relevant claim under the terms of loss of profit policy. Okay, so this is also a very simple problem. Moving on to the solution. First is we have to calculate the short sales. So standard turnover, that is 4 months ended on 31st December 2012 is 95,000, less actual sales 4 months ended on 31st December 2013 is 15,000. So the short sales is 80,000. Next is rate of gross profit. Gross profit ratio is equal to net profit plus insured standing charges divided by turnover into 100. So net profit is 20,000 and insured standing charges is 28,000. How we got this 28,000? It is 30,000 minus 2,000. Okay, so turnover is 2,40,000. So how we got this turnover of 2,40,000? It is 65,000 plus 80,000 plus 95,000, which is nothing but 2,40,000. Please read the problem carefully. So we get the GP ratio as 20%. Then there is a reduction in GP in short sales. Okay, so 80,000 into 20% is 16,000. Additional cost of working for mitigating damage is 600 given in the question. So as all standing charges are not insured, the amount admissible for additional expenses is equal to net profit plus insured standing charges divided by net profit plus all insured standing charges into additional expenses. This is the formula which I had given it to you. So 20,000 plus 28,000 divided by 20,000 plus 30,000 into 600, which is 576 rupees. Okay, so what is the total claim? Gross profit on short sales, which is 16,000, plus additional cost of working, which is 576, minus savings in the standing charges, which is 1,500. So the gross claim is 15,076. Now applying average clause. net claim is equal to policy amount divided by gross profit on annual turnover into gross claim. So it is 42,000 divided by 49,000 into 15,076, which is 12,922. Now this 49,000, how we got this 49,000? For this we have a calculation, very important. So gross profit on annual turnover is equal to sales for 12 months ended 31st August 2012 is 2,45,000. So 2,45,000 into 20% is nothing but 49,000. So this is how we substituted this 49,000 here in the net claim formula, and we got the net claim answer as 12,922. Okay. So moving on to the 34th problem. So before going to the solution, let's read the problem. A fire occurred on 1st July 2012 in the premises of A Limited, and business was practically disorganized up to 30th November 2012. For the book of account, the following information was extracted. Actual turnover from 1st July 2012 to November 2013 is 1,20,000. Turnover from 1st July to 30th November 2012, 4 lakh. Net profit for the last financial year, 1,80,000. Insured standing charges for the last financial year is 1,20,000. Turnover for the last financial year is 10 lakh. Turnover for the year ending 30th June 2013 is 11 lakh. Total standing charges for the year is 1,44,000. The company incurred additional expenses amounting to 18,000, which reduced the loss in turnover. There was also a saving during the indemnity period of 4,972. The company holds a loss of profit policy for 3,30,000, having an indemnity period for 6 months. There has been a considerable increase in trade, and it has been agreed that an adjustment of 20% be made in respect of upward trend in the turnover. Compute the claim under loss of profit insurance. Okay, so this is the question. So we are going on to the solution. First is computation of short sales. Standard turnover, that is from 1/7/2012 to 30/11/2012 is 4 lakh. Add increase at 20%, that is 80,000. So less actual sales during indemnity. 1/7/2013 to 30/11/2013 is 1,20,000. So we get 3,60,000 as a short sale. Okay, second is rate of gross profit. So rate is gross profit divided by sales into 100. So 3 lakh divided by 10 lakh into 100, which is 30%. Number 3 is gross profit on short sale. 30% on short sale of 3,60,000, which is 1,08,000. So 4 is calculation of additional expenses. So additional expenses, it will be least of the following. A, actual amount is 18,000. B, gross profit on additional sale at 30%, that is 30% on 1,20,000 is 36,000. C is net profit plus insured standing charges divided by net profit plus all standing charges into additional expenses. So it is 3,96,000 divided by 4,20,000 into 18,000, which is 16,972. Okay, we are using this formula because we have all the information related to this formula only. So it will be least of the three. Which is the least? Which is 16,972 is the least. So that will come in the outer column. Less saving in expenses, which is 4,972. So the amount of claim is 1,20,000. Okay, so net claim is equal to amount of claim into amount of policy divided by gross profit on annual adjusted turnover, that is 1,20,000 into 3,30,000 divided by 3,96,000. Therefore the net claim is 1 lakh rupees. So with this we have completed the problems on insurance claim. So the problems are very simple, provided you understand the concept and you read all the formulas. Okay, so please read the theory part and please practice all these practical problems at least 4 to 5 times. Thank you.